Hey y'all, Austin here, along with my partner in crime,
Partner in quarantine.
Jonathan Punk, coming to you live from my garage, giving you a quick market update on what's going on in the market right now. So if you hear any yard men or children or dropping pins, we apologize. But let's do a quick recap first before we get to where we are today. So we know that a few weeks ago, rates hit all-time low. Media did a good job of telling you about that. Media also did a good job of telling you about the Fed rate cut. What they didn't do a good job of is telling you about how mortgage rates rose in between those two things. And then after the Fed rate cut, that helped for literally one day. That helped to relieve some of the pricing. We got back some of the ground that we had lost. We didn't get all the way back. And then after that, rate shot up.
So what happened after that, Austin?
What happened after that? Great question. The Fed came out and said that they are going to purchase an unlimited amount of mortgage-backed securities.
Yeah!
Now, if you watched our video on the Fed rate cut, you know that the Fed rate cut doesn't necessarily translate to improved pricing with mortgage rates. This, however, does. This is huge news right now, and this has really pushed us this week back down to the low spot where we got a little over a week ago. We're still not back down to lowest ever, but we've been trending in that direction. It was a huge correction Monday, and then it's been a little bit more stable as the last couple of days have gone on. That's been a relief to me because, man, we were getting whiplash. This chart doesn't show you the volatility from day to day. We were getting 3 or 4 pricing adjustments throughout the day. Most of them were negative. Then we get a slight positive one, and it was nauseating. I mean, just trying to figure out when to lock, if to lock, all that stuff was crazy. So a lot of volatility has been happening. Right now, we are trending back down. It's good news. That's the main takeaway, is that right now rates have kind of come back down into the low range. We're not down to lowest ever yet. I think we're heading that direction.
So, Austin, where are we headed next 30, 60, or 90 days? What do you think?
Man, I don't know. What I do know is that this floor right here, this has been a hard floor with the investors' pricing. And so we've been talking about discount points and how even though the par rate it has been super volatile the last few weeks, you've still been able to purchase down to the bottom or close to the bottom. And the cost of those discount points hasn't changed much. It's just been where the par rate is. So we've been big advocates of that. What we've been seeing is that while there are some rates that are available down below, the cost of getting there is absurd. No one's doing it, and for good reason. And so the investors are providing a really hard floor right now on a 30-year fixed primary residence, conventional loan with great credit score. We're talking about somewhere in the 3.125, 3.25 range. They're not wanting to go below that. It would take, in my opinion, essentially everything we've been through in the last 30 days all over again to push us down into the 2s on the 30-year. I just don't see that happening. What I do see happening is I think that we stabilize here. Maybe we get back down closer in range with the bottom, but I don't know that we break through that floor. So rates are in a great spot right now. Things are really cheap, and we like where we're at. So if you're looking to buy or refi, don't delay. We'll see you around.